It is 10:48 a.m. Pacific Daylight Time. It is, it's the 12th day of March already, 2025, and this is episode 1053 of Bitcoin, and we're just going to jump right in. There's not going to be any kind of preliminary what we're going to talk about. We're just going to talk about it because I got places to be, and so do you. Cantor Fitzgerald is first up in the bucket list. Bitcoin Magazine, written by Nick. Cantor Fitzgerald to expand Bitcoin financing amid United States policy shift. And if you didn't know, Cantor Fitzgerald is huge. They're very, very large. Lots of money under management. Reflecting the United States' growing embrace of Bitcoin, investment bank Cantor Fitzgerald has announced partnerships with Anchorage Digital and Copper.co to support its expanding global Bitcoin financing business. Anchor Digital and Copper will serve as collateral managers and custodians for Cantor Fitzgerald, providing leverage to institutional investors holding Bitcoin. Anchorage Digital and Copper will use their industry-leading security solutions to custody and safeguard client assets. Quote, "We're thrilled to partner with Anchorage Digital and Copper, whose industry-leading security solutions will help us deliver best-in-class digital asset custody services for our clients," said Michael Cunningham, head of Bitcoin financing at Cantor Fitzgerald. Quote, "We are launching with $2 billion, that's billion with a B, in initial financing and expect to substantially grow the operations over time. With Cantor Fitzgerald's $2 billion initial investment in Bitcoin financing, this partnership signals a major step in mainstream financial institutions embracing Bitcoin as a legitimate investment class." Nathan McCauley, CEO and co-founder of Anchorage Digital, added, quote, "Our partnership marks a major step towards or forward for the Bitcoin financing ecosystem." And I'm pausing here to say I keep emphasizing the word financing. This isn't about holding Bitcoin. This is about holding Bitcoin as part of financing. All right, so we're starting to get into the using Bitcoin as collateral. We've talked about it for years, and now Cantor Fitzgerald has figured it out and is moving forward appropriately. Anyway, it's built on the safety and security of federally regulated digital asset custody. And by combining the best of traditional finance with the best of crypto, we are expanding the horizon of what is possible for institutions in Bitcoin, end quote. Well, this partnership comes as Trump's administration continues to advance pro-Bitcoin policies, including the creation of the Strategic Bitcoin Reserve and reversing previous regulatory hostility under Joe Biden's administration. The U.S. Securities and Exchange Commission recently rescinded the Staff Accounting Bulletin 121, which had previously blocked banks from offering Bitcoin custody services, and following this, the Office of the Comptroller of the Currency clarified that banks are indeed now permitted to engage in Bitcoin and crypto services, including asset custody. This shift helped pave the way for major financial institutions like Cantor Fitzgerald to expand into Bitcoin services. Now, Howard Lutnick, Cantor Fitzgerald president, who now serves as the United States Secretary of Commerce, has been instrumental in this shift. Lutnick has been working closely with Trump on initiatives such as the Strategic Bitcoin Reserve, a key component in the administration's crypto strategy. Quote, "Institutional investors are increasingly looking to diversify their portfolios and identify secure routes into the digital asset market," said Amar Kushanad, CEO of Copper. "This significant partnership with Cantor Fitzgerald will meet the growing demand for sophisticated financing solutions, with Copper's leading and collateral management platform providing a complete toolkit for secure and strategic asset handling." Okay, so what do we have here? We've got one of the largest companies with assets under management wholeheartedly embracing Bitcoin as a financing collateral, or a collateral in which financing can occur on top of. it's it while it is, yes, this institution will be holding Bitcoin, and these companies will be doing the third-party custody services for Cantor Fitzgerald. Cantor Fitzgerald isn't all about just, hey, let's put this stuff on our balance sheet. What Cantor Fitzgerald is doing is they're saying, we need this on our balance sheet because we need to be able to provide it as collateral for financing on other things. So now it's shifted from, hey, let's put it on our balance sheet because it's a great asset to have, to this is the best asset to have, not only just to have it on the balance sheet, but that we can leverage against it and not in a futures contract situation. Sort of like a, let's buy this building. Oh, well, what are we going to use to collateralize the building? Well, we're going to use the Bitcoin that's on our balance sheet that is now being custodied third party, in a third party manner by these other two companies, Copper and whatever that other one was. What the hell was it? Anchorage Digital. So now Cantor Fitzgerald and Howard Lutnick is using the recension of SAB 121, and they're taking it really, like taking the pig by the ears and just making it do what it wants. Again, it's another step that we have always talked about, but it's just now that we're starting to see it actually occur. Okay, so on to Russia, where the Bank of Russia has proposed to allow crypto purchases, but only by select investors, which means that even the Russian government hates their own plebs. Helen Part's Cointelegraph. The Russian central bank is considering a 3-year experimental regime to authorize select Russian investors to trade cryptocurrencies. On March the 12th, the Bank of Russia announced a proposal to allow, quote, and literally, I can't believe they're saying the quiet part out loud, a limited circle of Russian investors to buy and sell cryptocurrencies like Bitcoin, end quote. In accordance with the instructions of the President of Russia, the Bank of Russia has sent proposals to the government for discussion on regulating investments in cryptocurrencies, the announcement stated. While proposing to legalize crypto trading for investors with at least $1.1 million US in securities and deposits, the Bank of Russia also suggested introducing penalties for violations of the experimental regime. The central bank reiterated that other residents cannot settle payments using crypto. The ban on using cryptocurrencies like Bitcoin for payments in Russia was part of the country's very first crypto law, quote, on digital financial assets, end quote, which came into force in January of 2021. And in the new proposal, the central bank stated, quote, the Bank of Russia still does not consider cryptocurrency as a means of payment. Therefore, it proposes to also introduce a ban on settlements between residents on transactions with cryptocurrency outside the experimental legal regime, as well as establish liability for violating said ban, end quote. Despite banning residents from using crypto for payments in Russia, the Bank of Russia has been open about allowing cross-border settlements in crypto since at least 2022. In December of 2024, Russian Finance Minister Anton Sulianov confirmed that Russia had been actively experimenting with crypto in foreign trade in line with the country's legislation, referring to another experimental legal regime which was enforced in September of 2024. The Bank of Russia's reasoning to introduce the new crypto program for limited investors only came from efforts to increase the transparency of the local cryptocurrency market. Yeah, bullshit. I know why they did it, and I'll tell you here in a sec. According to the central bank, such a framework would introduce standards for crypto asset service providers in Russia and expand investment opportunities for experienced investors willing to take on increased risks. Quote, the Bank of Russia has repeatedly noted that private cryptocurrencies are not issued nor guaranteed by any jurisdiction based on mathematical algorithms and are subject to increased volatility, the authority stated, adding, therefore, investors, when deciding to invest in cryptocurrency, should be aware that they are taking on the risks of potential loss of their funds, end quote. In the announcement, the central bank said that it also proposed to allow qualified companies to become participants in the experiment. For financial institutions, that want to invest in cryptocurrency, the Bank of Russia will establish regulatory requirements taking into account the level and nature of the risks of such an asset, the authority said. By potentially allowing eligible Russian firms to invest in cryptocurrencies, the Bank of Russia may be paving the way for a Russian MicroStrategy or a company that would be committed to buying large amounts of BTC following the lead of Michael Saylor's strategy, formerly known as MicroStrategy. A number of companies worldwide, including Tesla, Metaplanet, MacLeod, have started purchasing BTC since Saylor's strategy purchased its first coins in August of 2020. Okay, so that's the end of the article. But that's not why they're doing this. They hate the plebs. Like any government hates their plebs. They just can't stand the thought of civilians having any kind of power differential whatsoever. Okay, so what I think is going on here is that the Central Bank of Russia, in collusion with the president of Russia, that'd be Vladimir Putin, who's Putin on the Ritz, they want to make sure that they fill their bags first this time. Because what they're watching in the United States is the following. The plebs got the Bitcoin first. The United States has around 14% of the population, or let's say between 12 and 14% of the population, actually hold some Bitcoin. Okay? And then, after we've gone through all the stuff that we've gone through, Trump gets up at Bitcoin 2024 and says Bitcoin Strategic Reserve, or Strategic Bitcoin Reserve, however you want to put it. At that moment, the individual states of the United States started saying shit. They'd be caught in the middle between the citizenry that resides in their states and the federal government, and both of them have bags, but the states themselves do not have bags. So the states are like, we've got to fill our bags. And some states are going to be able to do it, and other states like Montana have decided to take themselves out behind the woodshed and blow their brains out so that the family wouldn't see. Okay, I'm just saying. The whole notion here in Russia is to make sure that the federal government of Russia fills their bags first. And then they want Russian companies to fill their bags. Because let's face it, it's an autocracy. It's a totalitarian regime. It's not really a democracy. Yes, I'm going to use the word fascism, but I'm using the word fascism in the actual sense of the word, where fascism is the collusion between private businesses and companies and whatever federal government of which jurisdiction they fall under to make damn sure that things go the way that they both want. They're both working with each other, right? And essentially, they want to make sure that the cows in the field, i.e. the citizenry of the company or of the country, is just that, just chattel and cattle that they can milk. That we're the only ones that are providing these services, and we're going to make damn sure that you need these services. Sure, you're going to be able to work, and we're going to pay you maybe like a pension. I don't know what they got going on in Russia for their retirees. But at one point or another, we're going to get all that money back because me and the businesses are colluding with each other to make sure that the only way you can get what you need is through this collaboration between government and private businesses. And that's why the government wants to fill its bags and is letting companies fill their bags. And then the rich people of Russia be able to fill their bags. But as far as you plebs in Russia, yeah, you're hosed. You don't get to do this. Sad, man. Really sad. Be aware, a new Lazarus thing is on the horizon. That's that North Korean hacking group. Remember, that whole $1.4 billion or $1.5 billion hack of that Ethereum cold wallet that happened a couple of weeks ago? That was Lazarus. And it was done with this JavaScript injection. Well, apparently Lazarus is at it again with a new batch of JavaScript packages with crypto stealing malware, according to a report from researchers. Luke Edwards, decrypt.co. In a brand new attack, North Korea's Lazarus group has been linked to 6, count them, 1, 2, 3, 4, 5, 6, fresh, malicious npub npm packages. Discovered by the Socket research team, the latest attack tries to deploy backdoors to steal credentials. Lazarus is the infamous North Korean hacker group that's been linked to the recent $1.4 billion Bybit hack, $41 million hack of crypto casino Stake, and the $27 million hack of crypto exchange CoinEx, and countless others in the crypto industry. The group was initially linked to the $235 million hack of India crypto exchange Waresix in July of 2024, but last month the Delhi Police Intelligence Fusion and Strategic Operations Division arrested a Bengali man and seized 3 laptops in connection with that particular exploit. But this new round of malware linked to Lazarus could also extract cryptocurrency data, stealing sensitive data from Solana and Exodus crypto wallets. The attack works by targeting files in Google Chrome, Brave, and Firefox browsers, as well as keychain data on Mac OS, specifically targeting developers who might unknowingly install the packages. Quote, attributing this attack definitively to Lazarus or a sophisticated copycat remains challenging as absolute attribution is inherently difficult, wrote Kirill Boychenko, threat and intelligence analyst at Socket Security in a blog post. Quote, however, the tactics, techniques, and procedures observed in this npm attack closely align with Lazarus's known operations, extensively documented by researchers from Unit 42, eCentire, Datadog, Phylum, and others since 2022. The 6 packages that have been identified are IS Buffer Validator, UJ Validator, Event Handle Package, Array Empty Validator, React Event Dependency, and Auth Validator. These work by using typo squatting with misspelled names to trick developers into installing them. According to Boychenko, the APT group created and maintained GitHub repositories for 5 of the malicious packages, lending an appearance of open source legitimacy and increasing the likelihood of the harmful code actually being integrated into developer workflows. The packages have been collectively downloaded over 330 times, and at the time of publishing, the Socket team has petitioned for their removal, having reported the GitHub repositories and user accounts. This type of technique has been used by Lazarusin. Maybe that's a misspell of just Lazarus Group. Oh, it's Lazarus in the past, but they forgot the spacing. Sorry, guys. This type of technique has been used by Lazarus in the past, with a Bybit exchange heist valued at the loss of around $1.4 billion in Ethereum, and about 20% of those stolen funds have become untraceable. No, it's more than that, guys. It's lots more than that. In a statement, Bybit CEO Ben Zhao said that 77%, yeah, I went through this particular data. The 77% are still traceable and 40% have gone dark, or 20% have gone dark. All that, yeah, it's all bullshit. It's all been laundered. It's all been laundered. Ben is just trying to cover his own ass. But Boychenko says that the group's tactic aligns with past campaigns leveraging multi-stage payloads to maintain long-term access, the cybersecurity experts note. So these NPM packages are being used by developers. You think of them, I don't know, I guess I can kind of think of them as like what happens if you are using a library for your programming project. Instead of building your own library, you just, I don't know, leverage some other library, and you download the library. You put it as part of your package with your program or whatever it is that you've done. If the library that you downloaded is malicious, and everything is like looking at that you're doing, and all your users are doing on using your software, and it's all looking at basically a compromised library, it's some real serious shit that can happen. And this is sort of the same thing. This isn't me and you, the pleb, Joe Pleb on the street, going to GitHub and just trying something out. This is like I don't know, think of like Casey Rodarmor, the guy that did oh shit, what am I trying to say? Oh God, what is it? Those shit, hold on. Ordinals, my God, ordinals and inscriptions. That's what we're talking about. When they say developers are using these NPM packages, they're talking about developers like Casey Rodamer. So I don't think that he's done it. I'm just saying this is at this level of developer, somebody who's created this thing called ordinals and inscriptions. And I don't think he's been compromised at all. I don't like ordinals and inscriptions, but I'm pretty sure Casey knows what he's doing. Even if what he's doing isn't what I like, it doesn't really matter. I have no say in it. I'm just saying that if for whatever reason he was doing the same thing now and he downloaded one of these NPMs and they were from the Lazarus group, then anybody who's got a wallet that's using the ordinals and that's doing stuff with ordinals and inscriptions, yeah, that wallet's automatically compromised because the NPM package is operating in the background. That's why you need to be very aware of this shit. Even if you're not a developer, be aware that when you download a wallet, maybe the first question that you should ask is, I wonder what NPM packages were used to make this wallet. All right, so be careful out there, guys. This is not going to stop it. It's going to get worse. On to the block and Brian McGleenan, who's writing this one. Bitcoin and United States stocks climb as the CPI inflation cools in February. And I've got some things to say about this, but this is what's going on. Bitcoin and U.S. stocks increased in value on Wednesday after the consumer price index inflation rate for February came in lower than expected, providing a boost to risk assets amid ongoing economic uncertainty. I'm going to stop right there because generally speaking, what normally occurs with risk assets is that risk assets can be bought a hell of a lot more easily if you can take loans to get the money to buy the risk asset with. Those loans, the interest rate on those loans, if they're too high, then you don't want risk assets. If they're low enough, then you're like, hell yeah, man, let me take all the loans I can get. Well, what are those interest rates dependent on? The Federal Reserve's funding rate, their yield, their interest rate, which I can't remember what it is right now. I think it's like between 4.25 and 4.5% right now. Well, they did not drop the interest rate last meeting of the Fed. Okay. And they're saying that they're not really going to want to drop the interest rate until June, or at least that's what some of the pundits are saying. However, why would they drop the federal funding rate if inflation is starting to actually cool? Because that means to them, and I know the CPI is a lie. I get it, guys. I get it. But they're using that number as a real number, and that's what actually makes the effect. So let's go with that. If they think what they're doing is working, and it's working in spite of the fact that they did not drop the interest rate to make access to money easier, then why the hell would they want to drop the rate again? What I'm saying is this is the reverse of what we normally see. Generally speaking, when we see quote unquote good news for the markets, that means bad news for anybody who's expecting the federal funds rate to drop, making access to money easier. And therefore risk assets are the first to say, well, we're not going to be able to buy any more of this stuff, so we got to punch out. But we did not see that this time. And I don't know why. Let's see if the rest of this has some kind of information we can use to figure this out. The CPI rose 0.2% in February on a seasonally adjusted basis, bringing the annual inflation rate to 2.8, according to the U.S. Bureau of Labor Statistics. Well, this figure was below economists' projections of 2.9% and marked a decline from January's 0.5% monthly increase. The core CPI, which excludes volatility things like food and energy prices, also rose 0.2% month over month and 3.1% on an annual basis, and both of those are slightly below estimates. The softer than expected inflation data has fueled optimism that the Federal Reserve could pivot toward interest rate cuts sooner rather than later, bolstering both cryptocurrencies and traditional markets. Okay, pausing again because I'm reading this as this optimism that the Fed lowers their rates so that they can say, okay, well, what we've done has already worked, so therefore. But that's not the way this shit has worked in the past. Something's different here. I swear to God, I am not hallucinating. There's a different sentiment on the street. Let's see if there's anything else. Bitcoin jumped nearly 4% in the last 24 hours. The rally follows a broader rebound across risk assets as investors digest the possibility of monetary easing. Quote, today's data adds to the case for rate cuts, and risk assets are rallying in response. Bitcoin has rebounded, retesting 85K, while index futures push higher. This dynamic suggests that if rate cuts materialize this year, it could unleash a flood of liquidity, propelling equities and crypto higher. Mina added that Bitcoin appears to be on the verge of breaking out of its stubborn sub-$90,000 range with the potential to test 95K resistance before making a run to the highly anticipated $100,000 mark yet one more time. U.S. stock market or U.S. equities rallied alongside Bitcoin, with all three major indices posting strong gains early Wednesday. And they go through the numbers of Dow, but we'll do that later. Tuesday's market session had been volatile following Trump's announcement of higher tariffs on Canadian aluminum and steel, which he later reversed. All three major indexes have closed lower the previous day. Wall Street's fear gauge, the CBOE Volatility Index, fell about 5% to 25, reflecting easing investor concerns. Meanwhile, Treasury yields moved higher, with the benchmark 10-year yield settling above 4.28% on Tuesday. Again, that last piece of data, this doesn't make sense to me. Because their yield control, they don't have control of the yield on the 10-year Treasury bond. That means that real rates in the economies of the world are pushing higher no matter what the Fed does. Yet we've got soft inflation data coming out. It is no wonder that the markets are as twitchy as they are. And like I said yesterday, every time Trump can't sneeze without a barn catching on fire and destroying the livelihoods of some farm family. I mean, that's sort of like what it is. Everybody's they're just tweaking out, man. You can't turn on the lights in the room without a whole bunch of junkies just jumping up and freaking out and running out of the windows and falling to their deaths because they're just tweaking. That's what I see, man. This whole market is just, it never made sense, but it really doesn't make sense now. Maybe it's time we run the numbers. Futures and commodities, I got oil up 2.13%. back to $67.65. Brent North Sea is up almost 2 points to $70.90. Natural gas, however, taking a dump, 7.3% to the downside. Gasoline is up 2.1% to $2.15. All of the shiny metal rocks are gleaming in the sky. It's like Lucy in the sky with diamonds, because gold is up 0.75% to $29.42.80. Silver is up 1.79%. Platinum up 1.8%, copper up 1.7%, palladium is up 0.5%. Ag is, I guess, fully mixed today. Biggest winner is going to be cotton, up 1.3%. Corn is down 2.23%. Live cattle, well, it's up 0.84% today. Lean hogs moving sideways, and feeder cattle are up just over a full point. The Dow still struggling today, down 0.2%. However, it's not as bad as the last 3 days. The S&P is up 0.36%. NASDAQ is up 0.83%. And the S&P Mini is down 0.17%. And Bitcoin is having its, it's struggling today, as is everything. It's like everything is linked together right now, because we got a bunch of tweaker heroin addicts that are freaking out at the slightest mouse fart. $82,530 gives us a market capitalization of $1.64 trillion. We can only get 27.9 ounces of shiny metal rock with our one Bitcoin, of which there are 19,835,732.22 of. and average fees per block are stuck at 0.04 BTC. Taken in fees on a per block basis, it looks to be that there are 10 blocks, a measly 10 blocks, carrying 12,800 unconfirmed transactions waiting to clear at 3 Satoshis per VByte. Low priority is going to get you in at 3 Satoshis per VByte. Mining, wow. The hash rate has risen again, 835.4 exahashes per second. So got plenty of security for the Bitcoin network, even though the fees are low and there's blood in the streets all over the place. The miners just don't seem to want to capitulate yet. We'll see how this works. So from yesterday's episode of Bitcoin and entitled Oceans of Blood, I got Psyduck with 564. Satoshi says, Psyduck. Anonymous with 420 says, thank you, sir, no thank you. Yodel with 300 says, nothing. God's Death with 237 says, thank you, sir, no thank you. And Pies is back again with 100, says, thank you, sir. Hashtag 40 HPW. And that's the weather report. Welcome to part 2 of the news you can use. And if you do use the news that I give you to use, consider donating to the show, because this is the way this thing works, man. This is a value for value driven podcast. Not working all that hard on trying to get sponsors because nobody likes listening to a whole bunch of commercials. But if you like what I do, and if you are able to put this news that I give you, at least to calm, even if it just does nothing but calm your nerves so that you are like informed as to what's going on, then send me a huge boostagram. You can do that with any of the Podcasting 2.0 enabled podcasting apps like Fountain app, and you can find them at fountain.fm. That's my daily driver, and I love that app. I've been using it for years at this point. You can like write me a note and say boost, and it will say, how much do you want to boost? And you say, I don't know, 1,000,000 sats. Hey, you know, here's to dreaming. And then you hit the boost button and it sends me 1,000,000 sats, but it doesn't send it to a third party. It sends it directly to me. I run my own Lightning node. That's the Lightning node that gets all the sats. And if you can't do that, you can stream me Satoshis. You can stream me like 10 Satoshis a minute, 100, 1,000, 10,000. Hell, even if you could even do 1,000,000 Satoshis per minute and listen to all my shows. And then all of a sudden, I got enough money to take plane trips and go do stuff and go interview people at other places. Donate to the show, dude. Seriously. Donate to the show. Now, Rumble. There's been a rumor of Rumble actually getting into Bitcoin, and that's been going on for a while. Well, apparently they finally disclosed that they do, in fact, own $17 million worth of Bitcoin in their treasury, and they may make additional, quote, strategic purchases. This is Daniel Kuhn writing for The Block. Alternative video streaming platform Rumble has acquired 188 Bitcoin prior to the recent market sell-off, according to an announcement on Wednesday. The NASDAQ-listed company purchased about $17.1 million worth of Bitcoin at an average price of $91,000 per coin. The video sharing platform and cloud service provider said that it views this move as part of a strategic expansion into crypto and a hedge against inflation. The Rumble CEO Chris Pavlovsky previously announced that the company would acquire up to $20 million worth of Bitcoin. It announced its first round of buying on January the 20th, on the day of President Trump's inauguration, though it did not disclose the total amount actually purchased. The firm may make additional Bitcoin purchases depending on market conditions and its cash needs. Bitcoin and other cryptocurrencies have fallen significantly, blah, blah, blah. Quote, I'm just going to get all the way past where they're giving us old news and get back into this Pavlovsky stuff. These holdings have the potential to serve as a valuable hedge against inflation and will not be subject to dilution like so many overprinted government-issued currencies. We are proud to officially hold Bitcoin as we continue to grow and ingrain crypto into our company's DNA. That's an interesting word to use. Anyway, that was Pavlovsky. Is there anything else? Yes, in late December, the world's largest stablecoin issuer, Tether, made a $775 million strategic investment in the right-leaning streaming platform Rumble, with $250 million of the funds to, quote, support growth initiatives. The company previously raised funds in 2021 at a $500 million valuation, including commitments from Peter Thiel, Vivek Ramaswamy, and Vice President J.D. Vance. Uh-oh. that could come back to bite. A conflict of interest. I'm just saying. I see conflicts of interest everywhere. They're generally speaking, they're not good, even if we like both J.D. Vance and Bitcoin and Rumble. That's not what I'm getting at. I don't have a problem with it. I'm just saying it's a conflict of interest, and that shit can come back and bite you in the butt. Anyway, earlier this year, Rumble entered into a cloud service agreement with the government of El Salvador, where Tether is setting up a headquarters. Rumble's cloud service business hosts Trump's majority-owned social application, Truth Social, and Rumble counts approximately 70 million monthly active users and has posted net losses for the first 3 quarters of 2024, the last quarter it reported financial results. RUM, the ticker symbol, is up over 3% to $8.10 on the day. The stock is down about 33% year over year. So Rumble on deck fully now. What about Cali? Oh, California. Well, this is interesting. This is out of Bitcoin magazine. Vivek Sen Bitcoin is writing. Actually, it's Vivek Sen, but somehow or another it says Vivek Sen Bitcoin. Maybe he changed his name legally. Who knows? Anyway, California legislators has endorsed a Bitcoiner for the $500 billion pension board of directors. What the hell? California legislators have endorsed Bitcoin nonprofit founder Dom Bai, B-E-I, in his campaign for a seat on the board of the California Public Employees Retirement System. CalPERS, that's the name of the California Public Employees Retirement System. CalPERS oversees a massive $500 billion, that's $500 billion pension fund, serving over 2 million public sector retirees. And if elected, he would be the first openly pro-Bitcoin voice on the 13-member board. Bai is a 16-year veteran firefighter who founded Proof of Workforce, a nonprofit providing Bitcoin education to workers, unions, and pension funds. He previously served on Santa Monica's Pension Advisory Board and played a key role in the city's firefighter union, becoming one of the first to actually hold Bitcoin. Through his outreach work, he has assisted multiple unions, associations, and pensions in the exploration and adoption of Bitcoin strategies, and this includes spearheading education efforts for the Wisconsin retirement system. He said, quote, "Now more than ever, pension participants and stakeholders need to engage with their pension funds. I'm running for the CalPERS Board of Trustees with the goal of being a conduit for engagement and transparency while advocating for the long-term health and success of the nation's largest pension fund," end quote. He has received endorsements from a wide range of supporters, including State Senator Ben Allen, Tony Vasquez, and the California Board of Equalization, Santa Monica Mayor Lana Negrete, Vancouver Mayor Ken Sim, President of the Santa Monica Firefighters Local 1109 Garrett Childers, and others. CalPERS faces growing headwinds with its traditional 60-40 portfolio allocation, struggling amid inflation and rising interest rates. With ballots going out in late August, Bai's Bitcoin credentials could resonate with California's public workforce seeking new strategies to shore up their retirement security. His campaign website accepts donations in both fiat and Bitcoin. So having a Bitcoiner be recommended for a board of directors of a $500 billion pension fund for a state is kind of a big deal. He may not win. He may not get to sit on the board, but the fact that he's got so many people, saying rah rah, let LFG, brother, is a good sign. Now, moving over to Metaplanet, where the Japanese hotel company has acquired 162 Bitcoin for $13.5 million at an average price of $83,123 per Bitcoin, achieving a year-to-date Bitcoin yield of 53.2%. Dude, Metaplanet bought the dip. They bought the dip. They bought the dip freaking hard. The BTC yield represents the percentage change of the ratio of Bitcoin holdings to fully diluted shares outstanding over a given period. And as of March 12th, Metaplanet holds 3,050 BTC valued at $253.7 million with an average acquisition price of $83,180 per Bitcoin. Additionally, the company has issued 2 billion Japanese yen bonds. Well, let's just call it USD. 13.5 million USD in zero interest ordinary bonds to fund further Bitcoin acquisitions. At the time of writing, Metaplanet shares were trading at 3,630 yen, which is down almost 50% from its all-time high in February. And by the way, that was CoinDesk's James Van Straten writing. Coinbase has received the green light to offer crypto trading in India. Now, this is a bigger deal than you might think. Why? Is it because I all of a sudden love Coinbase? No, I hate them. Can't stand that company. It's the India thing that is piquing my interest here, because India has been flip-flopping on whether Bitcoin is legal or not for years, like at least 7 years. I mean, they at one point or another, they hated Bitcoin, and then they loved Bitcoin, and then they hated it again, and then they're going, okay, well, maybe it's okay, and then they said, no, it's not okay. It just goes on and on and on with this country. But love them or hate them, Coinbase is huge. This is a big deal. I don't think India is going to renege on this deal. We'll have to find out. Maybe Liz Napolitano from Decrypt will tell us more about it. Coinbase has secured approval to offer digital asset trading in India, bringing it a step closer to re-entering one of the world's largest crypto markets. The exchange is aiming to launch crypto trading services in India later this year. Coinbase first planted roots in India back in 2022, but it withdrew from the market a year later due to the regulatory hurdles. Quote, India's developer community and entrepreneurial energy are unmatched, Coinbase Regional Managing Director for APAC John O'Loughlin said in a statement. Coinbase's latest attempt to compete in the Indian market comes as local regulators and policymakers reevaluate more restrictive attitudes towards digital assets amid a broader pro-crypto shift in the United States and other corners of the world. Yeah, India doesn't want to be left out. India boasts the world's highest rate of grassroots crypto adoption with a strong decentralized finance scene, according to a 2024 Chainalysis report. But until now, the country's tight crypto regulations have kept many large industry players on the sidelines of its booming market. With local decision makers' stances on digital assets poised to change, India is now, quote, one of the most exciting market opportunities in the world, O'Loughlin said Tuesday in a statement. The executive added, The executive added that India is a major hub for on-chain development and increasing areas of focus for Coinbase, which launched its Shitcoin 1 based Layer 2 in 2023. India has amassed the highest concentration of talent in the on-chain space, with 12% of all global developers residing in the country as of 2023. It's that local talent Coinbase is aiming to woo by putting down roots in India, O'Loughlin said. Quote, by expanding access to our trusted platform and tools such as Base, we aim to empower a new generation of builders to stay home, innovate locally, and scale globally. So the suit speak tagline is still alive of innovate locally and scale globally. Whatever, dude. It's Coinbase. Coinbase is going to Coinbase. Ain't a damn thing we can do about it. But the fact that India is like maybe this whole strategic Bitcoin reserve thing in the United States has finally broken the back of one of the largest flip-floppers on whether or not Bitcoin is going to be legal. Maybe it finally broke their back. Who knows? I mean, next month, India could say, you know what? We changed our minds. Screw you guys. We're going home. I cannot tell you how many times I've had to report of India taking itself out behind the woodshed and blowing their own brains out every single time that they made crypto illegal or Bitcoin that they didn't like or something that somebody couldn't have or whatever it was. They're constantly pulling the trigger while the gun was aimed squarely at their temples. It's ridiculous. And I kind of expect that at one point or another we're going to hear how they flip-flop again, but this would be the last time, because either one of two things will happen to India. They will lose their footing at the global scale because they just refuse to move into the future. Or they flip-flop for the very last time and say, you know what, we relent. We're saying, uncle, we're on the mat. The 500-pound wrestler is on top of us. We can't even breathe at this point. Okay, uncle. I don't know. Who knows what's going to happen? All right, so that is the last story of the day. You guys go out, be good to each other, be good to your children, be good to your spouses, and be good to yourselves. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.